Hello everyone and welcome to Infinox Market Insights with me, Richard Perry, analysing markets for Infinox on Wednesday the 15th of December. Now there's a degree of caution across major markets this morning, perfectly understandable. We've got the Federal Reserve monetary policy meeting this evening, and that is expected to be a meeting where the Federal Reserve continues to accelerate its tapering of asset purchases from minus $15 billion per month up towards maybe as much as minus $30 billion. That would mean the end of the asset purchases by around about February and leaving the door open to maybe even a rate hike as soon as March, although the current pricing is around about June, July time for the first rate hike from the Federal Reserve. We'll be also looking out for how many dot plots are pointing towards rate hikes in the year of 2022. So that is the reason why markets are cautious ahead of that important decision. But the degree of caution is also coming through the fact that we had some Chinese data overnight. A bit disappointing, really. Industrial production, a little bit in line with expectations, but retail sales falling slightly and missing estimates there. So that sort of led a little bit of caution overnight. But not only that, we've had the UK inflation numbers out for November, spiking higher than expected, above 5% on the headline CPI there, leaves the Bank of England in a really tough spot to justify not hiking interest rates, even though they've got the Omicron variant. The CPI data is really pretty hot at the moment, so very tough decision that the Bank of England have got there. Now, the US retail sales is another data point today to really keep an eye on, obviously this afternoon, but we've got also the Federal Reserve this evening to keep our minds on as well. So the charts we're looking out for today, I'm looking at the cable chart in wake of that inflation data for the UK spiking higher. Is that UK sterling positive? Also looking out for the oil price, which has been drifting over. That recovery momentum has seemingly been lost. And also looking at the SP 500 futures, tailing off again, but is this a chance to buy? Let's have a look. So onto the Infinox MT5 platform, starting off with cable. And we've seen that sterling dollar has just been consolidating actually in the past few sessions. A little bit of a tick high yesterday, early move higher this morning as well. We've had the UK inflation data, which initially saw a spike higher on sterling, but just drifted back a bit since then. But certainly the move that we've seen in the technicals is less negative than it was. And this RSI picking up is interesting, but also looking at other momentum indicators. Those stochastics are sort of showing signs of improvement, a little bit of a tailing off there, but certainly we're also looking out for the MACD lines, which are showing signs of improvement as well. So is this the early signs of a turnaround on that cable chart? Well, resistance at 32.70 to 32.90, that is really where we're looking at overhead to really suggest that there is a recovery play. This 4-hour chart needs to get through those reaction highs to really suggest a momentum in a recovery. But you've got the Bank of England tomorrow, Federal Reserve tonight, so lots of volatility we're likely to see in the next 24 hours or so. But if it can hold above 32.90, then that would be recovery territory. But support comes in around 31.90 towards 31.60. So this oil price falling over in the past sort of 24 hours or so, just showing that 4-hour chart falling back. You can see that the sort of last two sessions really just ticking over, 2 sessions of negative candles in a row, really suggested that that consolidation, which looked to possibly be a bull flag, is now sort of turning negative, falling over on that RSI momentum under 50, falling over also at that falling moving average, which is 21-day moving average. So it's disappointing there for the sense of recovery. And if it starts to really decisively fall below 72.70 area, 72.90, yeah, that sort of starts to really turn corrective again. That 4-hour RSI doesn't look great, especially if the little tick higher then starts to fall over under 50. You've got the resistance at 74.25 now. Again, another lower high underneath that falling 21 period moving average, again, would not be positive. And finally, S&P futures, well, we're still in this trend channel higher. That is intact, and that continues to see the market running higher. But falling over in this recovery is disappointing, falling below the support at 46.50 area. Again, now testing this level between 45.85 and 46.10. Held on to that yesterday, but just the disappointment that we're going to see from that, I think, is important, because 46.50 is now a basis of resistance. Seeing that on the 4-hour chart, you can see those old levels of 46.50 up to 46.70. That's now resistance overhead, and if the market then falters around that, you could certainly see pressure back towards the 45.85 to 46.10 area. Again, looking at the 4-hour chart, RSI sort of turning a little bit more corrective. So how the market reacts to this rebound that we've had in the past 12 hours or so, if it starts to form another lower high, you could likely see further tests of the downside, and then maybe that sort of elicits the move back towards the bottom of the trend channel. So this is an important phase of trading on a near-term basis. Thanks for watching this video. I hope you found it informative for your trading. I'll be back on Friday, where we'll be looking at how the dust is settling from these central bank meeting decisions. So I'll leave you with the Infonox support and resistance table, and I will speak to you then. Thank you very much. Good luck in your trading, everyone.